All right, let's dive into this, guys. This is day 5. Day 5, intro to entries and exits. Also, we are going to be talking about support and resistance. Now, these are such important things that you guys must understand while trading stocks. Entries and exits, pretty simple, to kind of understand, but it's very hard and very complex to actually do properly. Now, we're going to be diving into more of entries and exits, where we should get in, where we should get out, in a later date, most likely coming up, later this week. But I do want to introduce you to them, what they mean, how you guys can make money from it, and then we have to talk about support and resistance before we can actually talk about entries and exits, because that's how we actually determine our entries and exits from support and resistance. So today's lesson is going to be a lot more focused towards support and resistance, but we do want to get started with a little bit of entries and exits. So let's dive right in on this, guys. What is an entry? Right? What is an entry point? Well, an entry point refers to the price at which an investor buys or sells a security. The entry point is usually a component of a predetermined trading strategy for minimizing investment risk and removing the emotion from trading decisions. A good entry point is often the first step in achieving a successful trade. So what is an entry point, as we know? An entry point is simply enough a price point where we are going to buy in, a price point where we are going to be getting into a stock. Now, these price points are predetermined, and this is when we come up with a trading plan. Another thing that we're going to be discussing in the near future, guys, putting together a trading plan. What is a trading plan? Why should we have a trading plan? Well, part of our trading plan is going to have an entry point. And the entry point is so important to us because this decides where we are getting into a play, right? Now, we may want to get in on a stock at this price because it's going to be a bounce play. We may want to get in on a stock at this price because it's going to be a breakout. We may want to get in a stock at this price because it's going to be a quick scalp play, right? We want to constantly be looking for the best entry because there are so many different entries we can do, right? If I really like a stock a ton, I don't just go ahead and buy it right away because you know what? That stock might be up too high and I know a pullback's going to be coming. If I see a stock right away, I don't want to buy right away because maybe that breakout isn't going to come until later on today, so I may want to wait a little bit. But an entry is something that sounds so simple, doesn't it? Oh, we buy a stock. But in reality, it's actually a very complex thing. Being able to focus and be able to know where to pick the right entry on a stock, because the matter of cents can determine if you are going to be making $100 to $200 to $1,000 to losing $100 to $200 to $1,000. It comes down to pennies, guys. So that's why you have to be an exact sniper and you need to study your entries and exits. So many people can figure out what the top gainer of the day is going to be. We can, so many people can figure out, oh, this stock has the best press release. This stock has, the most hype. This stock has the most volume. This stock's going to be the best one of the day. So many people can figure that out. But not many people can figure out the best price to get in on that play. Because even if a stock is a top gainer on the day, you can still lose on it. Because stocks aren't going to go straight up forever. Stocks are going to shoot on up, come back on down a little bit. Shoot on up, come back on down a little bit. Shoot on up, come back down a little bit. And a lot of people end up buying as the stock's falling. And you're saying, well, didn't you say they're just going to keep on going back on up? Well, when you're in the middle of the trade, you may not know that. And the stock may be up too high and the stock may be, on the last spike. So you try to cut your losses, get out quickly. And what happens? The stock shoots back on up and now you're right on the day. Now the stock's shooting on up, you hop back on in, now the stock has another pullback. And you start getting into a habit of buying late, chasing these plays at the very top, and then the stock's starting to come back on down on you. So getting the right entries down are very difficult. And we're going to be talking about how you can get the right entries down coming up shortly. Now, what's an exit? Well, exit, very easy. It's when you sell it, guys, right? An entry is when you buy it, and an exit's when you sell it. The act of disposing or selling equity shares that are owned by an investor. Some reasons to sell a stock include taking a profit, cutting losses, or accessing your cash. So, guys, when we sell a stock, when we sell our shares, what are we looking to do? We're looking to lock in our profit. That's what we always want to do. We want to have a nice entry, nice and low. And then when we sell our shares, what are we doing, guys? We are locking in profit at a higher point on that stock, right? What else could we possibly be doing when we're exiting a stock? Well, we could be in a loss and we're just trying to cut our losses as quickly as possible. But entry, exit. These are all a very easy concept that you guys can understand. But they are necessary to go over, and we will be diving into, of course, how and where to enter and exit a stock. But only for us to be able to understand how to exit and enter a stock, we need to go over some very important things. And those important things are going to be support and resistance. Now, this is going to tell us where to enter a stock and where to exit a stock. We need to understand support and resistance because these are extremely important things. And if you do not know support and resistance, this is where you're going to be buying and the stock's going to be turning on you, and you guys are going to be selling and the stock's going to start moving on up, and it's just going to turn into an absolute mess if you do not understand support and resistance. All right, and you can see a little diagram right here, and we can even think about it. Support. When we have support on something, right? What do we have? We have basically a support beam, if you want to think about it. The support beam holds up, right, the ceiling. It holds up the roof, right? When you have support, it's something or someone you can fall down to, and right, and that person's going to be able to carry you up, right, pick you up. That's what support basically is when you think about it. Just from looking at this diagram, you can see the stock falls, hits that support, hits that floor, right? It's that support line, and the stock moves back on up. Our resistance line is our resistance. Right? Resistance obviously is going to be some sort of force where we cannot break through. Right? Resistance, if you're running and all of a sudden there's a lot of wind in your face and you feel like you're running slower, it's because there's that wind coming in at your face. It's that resistance. There's something holding you back. So let's dive into more detail behind these plays to understand about how they can help us. Well, first things first, what is support? Right? When we're going over support or support level refers to the price level that an asset does not fall below for a period of time. An asset support level is created by buyers entering the market whenever the asset dips to the lowest price. In technical analysis, the simple support level can be charted by drawing a line along the lowest lows of the time period being considered. The support line can be flat or slanted up, as an uptrend or a downtrend with the overall price trend. Other technical indicators and charting techniques can be used to identify more advanced versions of support. So, what is going to be support to us, right? Support is really just one line, guys, that's going to be able to hold up our stock, right? If we look at this play, we look right here, and we see, these support lines. Every single time the stock falls on down, we bounce off this line. Right? The stock moves on up, it hits resistance, and it bounces off this line. Now, this would be an uptrend uptrend support, right? Because the stock is building higher lows. Let's say this black line down here. Let's say the stock fell, bounced off this black line. Let's say the stock fell, bounced off this black line. The stock fell, bounced off this black line. Those would be support lines as well, right? Those would be very nice support lines as well. The crazy thing about support and what you guys need to really get a good grasp on in the market is when we talked about in this definition right here, we have a support level is created by buyers. It's created by buyers, guys, right? So when we look at support, we need to understand that it is all made by stock traders. It's, that's the crazy thing about the stock market. The stock market is all psychological. It's all about understanding the human mind. That's psychology. And you can understand a group of other traders. That's called sociology, right? So when we're trying to say to ourselves, where is this stock going to bounce at? Where is this stock going to hold on up? We have to think, where are other traders going to buy it at? And that's something that's very important. We sit down in our chair every morning. We shouldn't say to ourselves, what stock are we going to buy today? What stock am I going to buy today? I have to think, what stock is everyone else going to buy today? Because what moves stocks up? Stocks move up from the majority of people buying them. Stocks move down from the majority of people selling them. So I need to figure out, what's the support line? The support line is created by buyers, and it's usually a price point that buyers know that the stock's going to that the stock's going to start moving on up. But the support line is really just an area where the majority of people are all going to buy back on in. So we need to figure out where. Where is this majority of area going to buy back on in? Well, that's what I'm going to teach you coming on up. But the support line is very important. Support helps us know where the stock's going to bounce at. It's going to help us know where we can get dip buys at. It's going to help us to determine if the stock is still on an uptrend or not. There's a lot of big things about support. Now, as you guys can understand, your resistance is just going to be the complete opposite of support, right? Resistance or resistance level is the price point at which the rise in price of an asset is halted by the emergence of a growing number of sellers who wish to sell at that price. It's just the complete opposite of support. Obviously, support's where we bounce at. Resistance is where people sell at. Resistance levels can be short-lived if new information comes to light that changes the overall market's attitude towards the asset. If they can be long-lasting. In terms of technical analysis, the simple resistance lines can be charted by drawing a line along the highest of the highs for the time period being considered, right? Depending on the price action, this could be a flat or slanted if there are, however, more advanced ways to identifying resistance, incorporate bands, trend lines, and moving averages, right? So, same exact thing I showed you guys before. When we have support, we could be on a flat line or we could be on an uptrend, right? Or resistance is going to be showing us every time we come up to a point, it gets rejected. And this would be a downtrend. Obviously, this trend line shows that we have resistance. Now, resistance is an area that when we look up to, we are going to be able to see, again, a lot of selling, and it comes back down. And the same exact thing that I said before, guys, about understanding groups of other traders, we don't say to ourselves, where do I want to sell it? We say to ourselves, where is everyone else going to sell it? Because that's going to help us put our game plan together. Again, there's nothing actually there other than just a price point, right? We might say to ourselves, there's no wall actually there on that stock. There's no barrier actually there on that stock keeping it from going, right? If you're driving a car and all of a sudden there's a giant cement wall, on the highway, you're not going to be able to, keep going. You're going to turn around, right? Because there's a giant wall. There's no giant walls on that actual stock. The only thing is that people saw, last time the stock came up this high, it turned around. So I think it may do that again. And the person says, I'm going to sell here because last time it came up this high, I'm going to turn around. And that guy says, yeah, I'm going to do that too. And the other guy says, yeah, I'm going to sell. That sounds like a good idea. And I'm going to sell, and I'm going to sell, and I'm going to sell. And what happens? The stock falls on down. Then you come down to a bounce area, right? You come down to a bounce area. And when you come down to the bounce area, if someone says, oh, wow, last time the stock was down this low, this is where it bounced up at. And someone says to themselves, yeah, that means that it's going to bounce again. I'm going to buy here. Someone says, I'm going to buy here. Well, I'm going to buy here. I'm going to buy here. And that's when the stock starts moving back on up. So it's not like actual, support levels. It's not like there's actual anything there. It's not anything there from, $1 to 101 to 110 to 115. Or if you're hitting resistance up to $2 to 215, 210, it's just numbers that people see in the past that help them determine what they should do in the future. And then if enough people believe that, oh, wow, this stock came up here last time and everyone sold it, I'm going to sell it. And people have that same mindset. What do you think happens to the stock? It starts falling back on down. So traders, investors, stock traders, we are the ones that determine how high stocks go. We are the ones that determine where they bounce at. We are the ones that determine where they hit resistance at. And it's just from the majority group of traders, right? What the majority wants. And you might say, well, Sean, why don't, traders just keep all buying forever and never sell? Well, you be the person then to buy up on the very top and hope, everyone else trusts you, and then they're going to buy more and they're going to buy more and they're going to buy more, right? No one wants to be that person. That's like, someone's like, yeah, you buy on the top. Yeah, you buy on the top, and we'll buy after you. Yeah, we'll do that for sure, right? And what happens? You buy in, they sell, they lock in their $10,000, and the whole stock collapses and dumps, right? Sometimes we get these hot runs. Sometimes we get these crazy moves and these crazy rips, but stocks are not going to go up forever. And we need to understand support and resistance. Now, when we're diving in about support and resistance, what can you guys start getting a little bit of an idea of, from our entries and exit talk before? Well, our entry and exit talk, we were talking about we need to understand support and resistance. Now, why would we need to understand support and resistance? Well, couldn't you imagine now, when we're talking about support, where we may want to buy? Right? We may want to buy off of support, right? And where do you think we may want to sell? We may want to sell at resistance right here, right? So maybe I buy off support and sell at resistance. Maybe I short at resistance and cover at support, right? Those are some, downtrends right there. Maybe, I buy right here, sell at resistance, buy at support, sell at resistance, buy at support, sell at resistance, right? Doesn't that sound good? Maybe again, I buy at this, low area right here, sell it up top. I know that the stock bounced off last time, so I buy it again, sell it where it sold off last time, buy at this area again. And what happens? Now, when it breaks resistance, right? This is something we haven't seen. We break through resistance. That's where we got to break out. So a lot of times when we break through resistance, we're hitting new highs. A lot of people before were saying, oh, wow, I haven't been able to, everyone's been selling at these areas. We hit new highs. We've never been this high up. Oh, wow, the stock is moving on up. I want to buy more. Someone else says, I want to buy more. I want to buy more. I want to buy more. Wait for me. I want to buy more. Right? And the stock keeps going up, 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 up. And that's, what leads to a breakout. So where would it go to next? It's next resistance line. But now we're starting to see, where we can start entering stocks. We want to either enter at A, support, or B, break of resistance. We want to sell stocks at resistance. All right? Or if we're shorting them, we can short them or hold them on the short at a crack of support. But that's what we want to start, really start dialing down. We need to be able to find support so we know exactly where to be buying it, and we have to find resistance to know exactly where we can be selling it. Now, when we break through resistance, that's where we get next legs on up, and then where we sell it at next resistance line, and we can bounce play it at, support. Something you need to understand is old resistance turns into new support. All right, I know that's kind of confusing at first, so let's say it again. Old resistance. Let's say this mark right here is $1, right? We hit $1, we fall. We hit $1, we fall. We break $1, what happens now? This old resistance is now, as you see, we're bouncing out $1, new support. Okay, and we have a new resistance line. So let's start talking about the types of resistance, because that's how we figure out where we're going to be able to see support and resistance. So what are the types of support and resistance? How can we find this? Because when we're looking at, a little diagram like this, it's very simple. But what are the ways in the stock market, in this penny stock world, that I'm going to be able to figure out where support lines are and where resistance lines are going to be? So there are three different types. There is going to be natural, there is going to be chart history, and there is going to be detailed. So there are three types of support and resistance lines. And it's not, there's only three, there's not only like one natural support, two chart history, one, it's all the same. One natural, chart history, detailed. Support and resistance, they all fall in the same category, keeps it very nice and easy. So first thing we want to go over is natural support and resistance, guys. So natural, when we think of natural, guys, what do we think of? We may think of trees, we may think of anything out in nature. That's kind of along the same exact lines when we think about stocks, guys. We're not affecting the stock. We don't have any indicators. We don't have any past chart history pattern. If a stock moves up the natural way, what is happening? It's going from, $1 to $2 to $3 to $4. Those are going to be natural resistance lines, guys. So what we have here is every 25 cents with the 50-cent marks and the whole dollar marks being the strongest. All right, so what do we have? Example, $1, $1.25, $1.50, $1.75, $2. These are what we call natural support and resistance lines. So let's say we have a stock, right? Let's say we have a stock and the stock is currently at 160 and the stock starts falling back on down. Where's our support line due to natural support? 150. Let's say it cracks 150 and it starts falling, and right now it's at 142, and now it's at 138. Where's the next area we could get a bounce play at? 125, right? So let's say the stock is spiking now. The stock is at $4, right? It's at $4.11 right now. Where's the next resistance line? 425. Now the stock is all the way up towards 515. Where's the next resistance line? 525. Now the stock's all the way up at 552. Where's the next resistance line? 575. Every 25 cents is going to be some sort of resistance. That's where people are going to lock in. But we need to understand that the 50-cent marks, such as $1.50, $2.50, $3.50, $4.50, $5.50, and the whole numbers 1, 2, 3, 4, 5 are going to be stronger than 125, 175, 225, 275. The 50-cent marks and the whole dollar marks are going to be stronger resistance and stronger support where they can bounce at. So again, just make sure you guys are keeping that in mind. So if you're buying a stock, you bought it at 160 and you have 1,000 shares and the stock ran up to 175 and you're saying, all right, here's a resistance line, but it should be lighter resistance, and you break through it. You say, great, now we're coming up to $2. Oh, $2, that's a natural resistance line, and it's also a little bit stronger. Let me make sure I lock in my $400 in profit. And what happens? That's going to be a strong resistance line. You just made 40 cents on 1,000 shares, and you just made $400 just like that. Now, we do have the strongest natural resistance line in penny stocks are $1, $5, and $10. These are all strong natural support and resistance lines. People say, again, $1 is the strongest, $10 is the second strongest, $5 is the third strongest. Now, why would that happen? Why would these marks be very strong? And it all comes back down to mindset. It all comes back to psychology, understanding other traders, sociology, right? It all comes down to that. Now, when a stock goes from 99 cents to $1 per share, does that mean anything? Well, it means it moved 1 penny. But when we actually think about it, we're going from a penny stock to now, $1 per share. We're going from 99 cents to $1 per share. Now, in penny stock world, that is something very big to go from a penny stock to now $1 per share. And it's where a lot of stocks get held up. It's where a lot of stocks hit and drop back down. It's where a lot of stocks hit and drop back down. But when you break $1, you get massive rips, massive runs, big time climbs. And we're going to be talking about $1 breakouts in the near future. Now, think about that for $10. Why would $10 be such a strong resistance line? Well, $10, we're going from single digits to double digits. Now the stock's going from $9.99 to now $10 per share. We're now in the double digits. Now it doesn't seem like much. It's only a penny. But again, it's all psychology. So a lot of traders say, whoa, $10, I'm selling there. We're not breaking that. $10, I'm selling there, I'm selling there, I'm selling there, right? Stock starts falling. If we break it, that's where we get our next leg up. That's where we get our next rip. That's where we get our next climb. That's where we see these stocks, keep on moving. So, and then if we get a breakout, when it comes back down to $10, we see a nice bounce play right there. So, that's very solid. That's very awesome, right? Now, let's look at an example right here. Here's GNCA, right? Here's a chart of GNCA. Where's our natural resistance? If we're looking at a daily chart, we could see our natural resistance, our main natural support line is going to be at $6. So let's all look at $6 right here. And we can look across the board and we could see came up to $6 right below it and fell. And we came up it, we just came right above it and then fell. And then we hit it and then we fell. And we also bounced right here and we fell. And we had consolidation right here. And we hit it and fell and hit it and fell and hit it and fell and hit it and fell, 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 hit it and fell. A little bit of support right here. And then even back here. Right, we hit it and we fell, and then we have support back here. So $6 on GNCA is a pretty critical line. If I was buying this stock right here at 363, and let's ignore these indicators, let's get rid of all this stuff right here, and this stock starts spiking, where do you think I'd probably want to lock in something? Probably at $6. And why do I want to lock in something probably around $6? Well, because around $6 where it fell here and fell here and fell here, and here, and had some old support here. And as we know, old support's going to hold up as new resistance. And we had resistance here and some new support here. So I could see $6 is a pretty strong resistance line. And I can see when we're above it, we also have a lot of support, right? We can also see we're bouncing off this line as well. So here's a real life example about seeing $6 as a natural support and a very strong resistance line. And just by seeing this, I'm gauging, all right, if I buy GNCA and it starts spiking, I probably want to lock in something at $6 because that's where it usually starts turning, right? So easy example right there to really get, great understanding about natural support and natural resistance. Every 25 cents with the 50 cents in the whole dollar marks as being the strongest support and resistance lines. So what's next? What's next, guys, is past chart history. This is where the stock has been rejected or bounced in the past, right? The past can tell the future. So if we're looking at a play, guys, all right, and the stock, has spiked a ton in the past, we can kind of predict that this stock may spike again in the past. Let's imagine you guys are, 12 years old. Right? And let's say, again, I'm just giving you guys an example from me. Let's say all your kids in the neighborhood, get together every single Thursday night and you guys play a game of baseball, right? All the kids in the neighborhood, everyone's there. Johnny's there, Tim's there, Martha's there, Stuart's there, everyone plays. And you know what? Every single week, Bubba hits, huge home runs. Every single week, Bubba hits a home run. And when we start picking teams, who's going to be the first person that you want to pick? It's probably going to be Bubba, right? Probably going to be Bubba. And why is Bubba the first person that you pick? Because of his past performance, right? his past is going to be able to tell what his future is going to do. Because if he has a great past, he's going to be able to probably have a great future. And if a lot of these stocks have a great past, they're probably going to have a great future. And not always guaranteed, but especially when we're talking about support and resistance lines, if we have been rejected at certain areas as resistance in the past, that means they're going to be rejected at these areas in the future. And if these areas have bounced off these marks in the past, they're most likely going to bounce off these marks again in the future. So that's where past chart history pattern can really help us. And all we're trying to do is understand where they either bounced off of or where they hit off of, it got sold at, and that's going to be able to help us out. So another real life example right here. And again, the reason I leave my indicators up is because I want you guys to be able to see it with, indicators and with, the green candles, the red candles, everything along these areas. We're going to be diving into candles very shortly. So what do we have right here, guys? We have past chart support. So don't, focus on what number this is at right now. Focus on the past chart history. And what do I see right here? I see that the stock bounced right here. And I see it 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 bounced right here. And it went underneath it for a little bit right here. We started cracking and started breaking that line. But what did we notice? Let's say I buy the stock, or let's say the stock goes on this nice rip. It comes back down, bounces right here. And the stock starts falling. I should say, oh, wow, the stock bounced right here last time. I should be able to buy it right here. And it rips on up. And the stock falls back on down. And what happens? It bounces right here and rips on up. And the stock falls back on down. I say, wow, bounced here and here and here. I should be able to buy right here. And the stock bounced on up. Ignore this buy symbol. This is from Trade Ideas. I did not put this. Trade Ideas, sometimes puts buy alerts randomly on their charts. So again, that is not from me. That is not, anything that I put here for this presentation. That just has to be there for the chart because it's part of Trade Ideas. But what we see right here is all this past chart support. So if I see this, from this point, I'm able to predict the future. I'm able to predict the future on where the stock's going to bounce at because of its past performance. And it's the same exact thing if I want to turn this into resistance. Same exact chart, guys. Same exact chart. But did anyone notice that? Anyone notice that before I even put that on there? That our resistance, when it spikes, it hits here and it falls. And it spikes and it hits here and it falls. And it spikes and it has the top of this, of the upper body. And it falls. So let's say this is, $5 right here. And let's say the stock runs to $5. I might say, well, it spiked and got rejected here. And we have an upper candle body right here at $5. This might be an area that I probably want to lock in something. Right? I probably want to lock in something right here because I know $5 is going to be a little bit tricky. Right? So that's going to be a resistance line because of its past chart history pattern. Right? And that's all we're looking at. Right? Our past chart history pattern is going to be able to help us determine our future. So past chart history, our past chart support, these are all things that you need to understand. So we have natural, right? Natural and past chart so far. Now we have 3. And what's our third one, guys? What's our third? Detailed and support, support and resistance. Kind of gave it away right here. This is called detailed support and resistance. Now, if you see RES, that's just an abbreviation for resistance. So detailed support and resistance. This would be any number that would be a statistic on the stock. So for example, guys, this would be the open, the close, the previous high, the previous low, 200-day moving average, 50-day moving average, 52-week high, 52-week low, anything along those lines. These are also, different indicators, right? So detailed support and resistance are anything that you guys would basically look up to kind of figure out. Now, how could you look it up? Just by going on yahoofinance.com, right? So if the stock, let's say, starts falling, the stock opens up at 659, the stock falls down to 630 and starts coming back up to 659. Well, we know 659 was the open. That's where this stock is going to have some resistance because it fell at that area. Now it's trying to break its open. Let's say the stock closed and it had a gap down, fell overnight, right? Now as the stock starts moving on up, where's going to be a resistance line? The previous close of 657, right? Let's say, the day's range. The stock right now is at 666. Where's the high of the day? The day's range, the high of the day is 670. So if we come up to 670, that's going to be a resistance line. But also if we're at 670 and the stock starts falling, and the stock falls to the open at 659. That's going to be a detailed support line. And let's say the stock starts falling down to 657, the previous close. Well, that's a support line as well, right? So the 52-week range, where it's been throughout the whole entire year, if the stock falls down to 617, what's going to happen? It's probably going to get a nice bounce play. That's a nice support line. 52-week range is 1259. If the stock runs up to 1259, that's going to be probably a strong resistance line. So our detailed is, again, any number that would be a statistic on the stock. Example, open, close, previous high, previous low. These are all very important areas that I want you guys to understand. I want you guys to have a good grasp towards. So if we're reviewing everything so far, what have we gone over? Well, if we go back to the very start right here, we have our entries and exits, right? Our entries where we buy stocks, our exits are where we sell stocks. Now, how do we know where to buy and where to sell? Well, we need to understand support and resistance. Support is where the stock's going to bounce off of. Resistance is where the stock's going to get held up and people are going to sell, right? So support is where we look to buy. Resistance is where we look to sell. If we can break resistance, we can see breakouts. Now, old resistance turns up into new support. So we buy at support, we sell at resistance. We can also short at resistance and cover at support. The crack of support, that's where the stock usually falls and it's going to be done, where a lot of shorters like to move in. And the break of resistance is where the stock has its next leg on up. And then where the stock has a breakout, that's where we look for breakouts at the break of resistance, where we haven't been before. Gets a lot of traders excited. Old resistance right here holds up as new support, where the stock, starts basically on a next higher low, where the stock continues to climb, old resistance turns as new support, and we find a new resistance level. Now, how can we be able to determine where our support and resistance are going to be? Well, we can do that by 3 different types: our natural, our chart history, and our detailed. Our natural is every 25 cents, with the 50 cents and the dollar marks holding up as the strongest. Right here, we have our $6 example, right? As that's a nice natural whole number. We have past chart history. Past performance can tell what the stock's going to be doing in the future. Where this stock, we have our support line right across the bottom. Every time it comes to this line, it bounces off of it. And every time it comes up to this line, we usually hit it and start falling off of it, right? From there, we also have detailed support and resistance. Now, this would be any statistic on the stock. So any statistic that we look up, such as the open, the previous close, the high of the day, the low of the day, the 52-week range, anything along those lines. So this is getting us ready to start developing trading plans and be able to figure out, what are we going to be doing when we actually get in on this play? How are we going to play the stock? And, be able to have a good fundamental understanding about where and why we want to get in on these plays. Awesome job, guys. That's going to be wrapping up our day 5 boot camp. And if you have any questions, comments, or concerns, please ask me. I'm happy to help you guys out. But awesome work. Let's get moving on to day 6 in the near future. And that's going to be going over candlesticks next.